A pro-crypto president can't pump Bitcoin. A weaker dollar cannot pump Bitcoin. Institutional adoption can't pump Bitcoin. The Fed injecting liquidity, stock at all-time highs, can't do it either. So the question is this: if nothing can't pump Bitcoin, what exactly is holding it back? And more importantly, which comes first? Bitcoin at $300,000 or a massive global liquidity drain that resets everything? This is not about a Bitcoin debate. This is a liquidity regime debate. The chart you're showing, that I'm showing you now, tells you far more about narratives than the financial media. Of course, they're not going to show you this because it's kind of boring. But I'm going to make it interesting. So what you're seeing, the blue line, is Bitcoin price. Okay? The green line is global M2 liquidity. The liquidity, it's called the liquidity from the Federal Reserve. So money going to the system, essentially. Global M2 is shifted forward by 3 months. So this means the green line is leading, the money in the system. The blue line is reacting. Liquidity moves first. Real risk assets, then they respond later. So the left axis is basically the amount of global in trillion of M2 money supply, and on the right axis is the Bitcoin price. Log scale matters because Bitcoin is exponentially by nature, and percentage moves matter more than absolute dollars. And this is something that I'm always doing. I'm never showing you absolute numbers, like the price going out doesn't mean anything. You need to understand from a relative basis. I mean, you're a tall guy, sure, but compared to an ant, you're gigantic. So are you gigantic or you're tall? Exactly. So the critical insight is this: from the late 2023 through mid 2025, global liquidity expands aggressively, and Bitcoin follows with a bit of a lag, as you could see. But notice what happens next. Liquidity keeps rising, the green line, but Bitcoin stalls and rolls over. That's the story. So what happened? Why? Rate cuts didn't work. Rate cuts without balance sheet expansion is cosmetic. What I mean by that is they cut the rates. Remember the government, the Fed? So markets don't trade on rates. Market trades on net liquidity. So if the rate cuts are offset by QT, treasury issuance, and dollar funding stress, then they are irrelevant. Bitcoin didn't stall because cuts failed. It stalled because cuts didn't add net liquidity. You could understand that. Markets don't run on the ideology. They run on cash flows. Policy signaling matters only when it changes funding condition. No change in collateral availability, dollar liquidity, leverage capacity means are not sustained bids. A weaker dollar didn't work. This is critical. Bitcoin is not a simple anti-dollar trade anymore. It's a globally leveraged system. A weak dollar can't coexist with liquidity scarcity. Bitcoin doesn't respond to the headline. It responds to cross-border dollar availability. Institutional adoptions didn't work. This one hurts narratives the most. ETF didn't fail. They completed their job. Right? They converted speculative enthusiasm into regulated exposure, meaning that ETF that holds the Bitcoin. They absorbed early demand, normalized Bitcoin into a macro asset stack. You can, and I tell that to my subscribers and to my members all the time. You know, these are the ETF that you could buy to actually hold Bitcoin, so you don't have to worry too much about it. But ETF do not create leverage. Liquidity does. The stocks at an all-time high didn't work either to sustain Bitcoin because equity strength right now is narrow, defensive, balance sheet driven. This is not a 2020 style reflexive risk on. It's buyback. It's mega cap concentration. It's duration hiding. Bitcoin doesn't rely on defensing. Bitcoin does not rely and rally on defensive equity strength. So the real driver is global liquidity quality. This is the most part most people miss. Not all liquidity is equal. Is this liquidity a good liquidity? You have lots of water, but can you drink it? What type of liquidity matters? Okay. Bitcoin responds to unsterilized liquidity, leverage-enabled liquidity, and cross-border liquidity. What you have instead, you have liquidity trapped in sovereign balance sheets, liquidity absorbed by treasury issuance. Yeah, you have lots of liquidity, but you're using it to refinance yourself because you owe so much money, you're paying yourself. That's literally what's happening with the US. And be careful. That cannot keep on going if the dollar gets weaker. Liquidity sterilized by regulatory capital constraints. That is why global M2 rises and Bitcoin doesn't respond proportionally. The system is liquidity rich, but it is leverage poor. So, two potential futures. Yeah. I mean, basically, all you need to understand is this. I mean, there's a lot to understand, but let me make it easy for you. Basically, you have to realize that liquidity went up and Bitcoin went up with liquidity, but then it just didn't. Why? Well, because that liquidity is not the same anymore. Because the US could print money, could do lots of things, could lower rates, but nobody believes in lower rates right now. We lowered the rates, but nobody believes that the inflation is out of the way. The market is very, very smart. It's like an entity. It understands everything. So, two possible features. Scenario one, Bitcoin, $300,000. And you can make money with Bitcoin without actually owning it. You just buy a bunch ETF, and I could show you that. I will address that in the coming weeks in my channel for my members only. Okay, members, I get more specific. So this only happens if central bank lose control of the funding stress. QT is abandoned globally, fiscal dominance accelerate, and sovereign issuance overwhelms the buyers, and liquidity leaks into speculative assets again. In this case, Bitcoin rises gradually, it prices violently. Not because of believer, because there is nowhere else for liquidity to go. Where are you going to put your money? You don't trust anything anymore. That's why you're kind of seeing gold going the way it did and Bitcoin the way it did, because they said that, well, maybe they know what they're doing after all. Scenario number two. This is more probable than the first. A massive global liquidity suck out. This is how it happens. Government issue more debt. Okay. Central banks refuse to monetize aggressively. Risk assets compete for shrinking liquidity and leverage contracts. Bitcoin doesn't crash because it's bad. It stalls because liquidity is rationed. This would look like sideways chop. Violent rallies that fail. Increasing volatility without a trend. So, investor playbook. And this is a mistake retail makes. They ask, what will pump Bitcoin? And the professional, what we ask is, what will break the liquidity constraints? Because we know what's moving this thing. And I think I've shown that before, but basically Bitcoin doesn't lead cycles anymore. It confirms regime shifts. That is how you have to read this thing. So what should you be watching? You should watch a global central bank's balance sheets, the treasury issuance versus absorption, the repo market, cross-currency, emerging markets, dollar funding. When those break, Bitcoin won't need a narrative. So, in conclusion, Bitcoin is not broken. It's just a system is transitioning. We are between financial repression and financial capitulation. Bitcoin at 300,000 is not a forecast. It's going to be a consequence. A consequence only arrives after liquidity fails somewhere else first. So remember, liquidity tied to Bitcoin.